What is going on, investors? Back again. Time to take a look at Twitter. This is actually the first time on the channel we've dissected Twitter, ticker symbol TWTR. So this stock down huge today, 20%. You'll see this. I am recording this during the trading day. Who knows how these things will end up, but this stock is solidly in the red right now, down 20% after reporting earnings yesterday, which weren't too bad. Revenue was up about 14%. We'll jump into the numbers here in a minute, and then we'll jump over the stock chart. I'm going to show you some interesting stuff there. So again, revenue up about 14% year over year. What people didn't like, this is what is probably having the stock sell off a little bit. Monetizable daily active users grew 29%. On the surface, that seems pretty good, but the consensus was that we'd have 194 million, call it 195 million, and it came in at 187 million. So they thought they'd have about 36 million from the United States. It came in at 36 million. What people were expecting was 37.6 million, and international came in at 137, and it was expected to be 158. So either the expectations were too high, or they were just completely off, or Twitter had a really bad quarter in terms of monetizable daily active users. I think it's probably a mix of all three. So obviously this consensus and kind of the estimates were way off, and it could be that just people are not necessarily sure how to analyze or how to predict Twitter's usage rate, but all things being equal, they were off considerably what people were expecting. Now, that's not necessarily the most important thing. Let's jump into the numbers and see what we're seeing here, because look, if this stock drops 20% in one day, maybe it's a buy. We'll talk about that here in a minute. So 3 months ended here, 19 over 20. We've got 9 months here, 19 over 20. We see we went from 823. These are in thousands, okay? Most of the companies we've looked at recently are in millions. These are in thousands. So this is 823 million, and we've ticked up to 936 million. So not bad, but for the 9 months, we see we're actually declined just slightly. We're basically flat on revenue for the last 9 months. That is not particularly the best trend, okay, considering there's been a lot of people staying at home. We're in an election year. I know we had sports were delayed for a while, but every sports league has been able to finish their league, major sports league has been able to finish their league. And so, and the reason why I mentioned that is sports is a big topic on Twitter, and so is politics. And we're kind of in the midst of, a beautiful season for all those things. I know basketball and baseball is all ended, but we still have NFL football, and obviously we have the election next week, and Twitter is not growing their revenues over the last 9 months. Makes me wonder going forward if there's some problems there. So let's take a look at costs. Let's see how well they're controlling costs. Again, we ticked up about 100 million here on the top line, but unfortunately we ticked up almost the same here on the bottom line, total cost of expenses. We see here total cost of expenses. That includes R&D, selling and marketing, and general administrative. For the full year, we see a somewhat similar picture. We're actually flat, again, down slightly for the last 9 months, but we were actually up in our expenses. So that led to a 9-month negative income from operations of $225 million. Now, for the last 3 months, it's a slightly more positive picture. In the last quarter, we earned, previous period, we earned 44 million. This period, the last 3 months, we earned 56 million. It makes you wonder if they accepted political advertisements, how much better this would have been. Obviously, if you're not aware, Twitter denied money from political candidates, which personally, if I was a shareholder of Twitter, I wouldn't be super excited about. So, do you want to make money, or do you want to be a political activist company? So, I think those are two completely different things. We see here from a net income perspective, we lost $1 billion. A terrible last 9 months. Lost 1.3 billion. That compares, we made, it's like 100% difference. Made, 1.3 billion in the previous period. Obviously, there's probably it looks like some income tax here as well. But for the last 3 months, probably a little cleaner view, we made less money even though our top line grew. So it's in my opinion, kind of an ugly quarter from an earnings perspective. Let's go down to cash flows. Let's see what's going on here. So we pull down our net income number here. We were obviously negative for the 9 months here. And so we'll see how that factors into our cash flows. Now, the main thing I see jumping out of here is this stock-based compensation. Take a look at this. In the quarter, $115 million worth of stock-based compensation. This is in a company that did $900 million. They are compensating their employees virtually 10% of revenue. Guys, that is egregious, in my opinion. Just absolutely egregious for a company that's really not making a lot of money to compensate your employees this much. So look, somebody is getting rich on Twitter, and it's really the employees, or it's the people that are receiving this stock-based compensation. Probably more should fall on the hands of the executive team. They are getting absolutely filthy rich off this company while they're not really producing that well on this top line. So don't really like to see that. And you actually see stock-based compensation actually went up over the previous period, actually quite a bit. Honestly, that's a pretty decent sized jump considering our net income went down from 36 down to 29. So that's a problem. And then if you look at for the last 9 months, it's an even worse picture. And if you see stock-based compensation for the 9 months is actually up as well. Not a good picture, honestly. Obviously, from a cash flow perspective, it will change the story completely because you factor in this depreciation, these cash flows, this amortization, and all of a sudden you get to pretty nice cash flows off a company that, again, is doing just right south of $1 billion in revenue in a quarter. So don't necessarily like what I'm seeing there. Let's jump up to the balance sheet. Let's take a look at the cash up here. We've got $7 billion, looks like about 7.5-ish on the balance sheet in terms of cash. That should be plenty of money to allow this company to have plenty of runway before they really have to do any kind of financing. They don't have any debt, no need necessarily to have a lot of debt, but they do have some convertible notes and some senior notes as well. Some people, this is kind of a form of debt as well, so that's sitting on the balance sheet. But we have total liabilities here sitting at $5.2 billion. It's actually up quite a bit from the previous period. But we have more than enough of that here in cash as well. So Twitter, from a balance sheet perspective, like a lot of tech companies, like a lot of these asset-light tech companies, is particularly healthy from a balance sheet perspective. So there really is no concern there. What I am concerned about is the stock-based compensation. I'm concerned about expenses not being necessarily in check and no money flowing to the bottom line, especially over the last 9 months. And even the last 3 months looks like a particularly poor quarter. So I know they blamed a lot of it on user growth, but the financials of this company don't look good. Now, this company actually acts very predictably when you look at a stock chart. Well, I've got a weekly stock chart here, so not a daily, not a monthly. We're looking at weekly. And what I've done is I've drawn in some channels here. This stock tends to channel up, and I could have drawn in more. I could have drawn in some over here, could have drawn in a channel over here. This stock likes to channel up and then make these, look at these big, gigantic red candles. Look at these big red candles. Big candles here. Big red candle again. This stock channels upward and then sells off, okay? So that's just something you want to keep in mind if you're a Twitter shareholder, okay? This isn't necessarily a stock I would be really super excited about holding because of this stock chart, because we have these big channels upwards and then these big gigantic red candles falling down. And what tends to happen, take a look, we have a big red candle. That wasn't the end of the selling. The stock kind of chopped around again and then boom, bottomed out here, okay? Same thing here. We had a big red candle and then yes, we had a nice move back up to the upside, almost captured all this gain from this red candle, but boom, we collapsed, taking out the lows that we made back here. Same thing here. We channeled way up. We even had a little bit of red candle, a little hesitation here, and then we have a big red candle here breaking outside of our channel. So, two things can happen. It could be a pump fake like we had here. We could traverse back up, but I would expect this stock to take out its low. Will it come down here and take out these lows down at $20 a share? I don't know. I think a lot of it depends on how well the company executes and if it can stay out of its own way. It seems to want to butt its head again with regular regulators and with the United States government, I don't necessarily think that's a great idea. And so really the level I have marked out here where I would even consider buying shares of Twitter, we see here, it was a pivot point here, little bit of support here, little bit of resistance here, little bit of resistance here, same here. This point right at $35 a share, which is about $6 lower where we're at now, to me would be the first area where I would be like, okay, maybe this is where Twitter does a stall out, okay? Maybe this is where I'd want. But looking at this chart, man, you could just flip coins to where, when this big red candle is going to bottom out and then the channel. Look, this stock is going to get back on a run. It's going to channel back upwards. But when you have these big sell-offs, it makes it very difficult to be an investor. They don't pay a dividend. They're not executing any kind of buyback, I don't think. So just from it's just not an attractive stock, in my opinion, from just a chart perspective, from a financials perspective. Just nothing looks particularly exciting about this one. If you are a user of Twitter, if it's something that you believe in the long term, by all means, it's a stock that you can definitely hold, and it has done well. Look, if you're down here in the $18, $20 range, we're still up here at $40. This stock has still performed tremendously well. Just from a predictability standpoint, from a buy and hold standpoint, this is just a really ugly and choppy chart. These were fairly ugly financials where we're compensating the employees and the executives very, very nicely for what I see as essentially mediocre results. And then if you get into the daily active users and you believe these consensus numbers and how badly they missed that in an environment where social media stocks and engagement online should be relatively easy. Wait till movie theaters are open. Wait till people are able to travel again. Wait till you're able to go to a sporting event, not just watch it on TV and tweet about it. It could be that those user numbers get even worse. So we're seeing in the regular session here, the stock is selling off tremendously. I'd probably stay away from this one, but maybe leave me a comment down below. Maybe make an argument. Maybe change my mind. We do have a $33 billion valuation on this one. It really, from a price to sales, price to revenue aspect, from that perspective, it actually seems relatively attractive. I'm just looking at this stock chart and it just gives me a headache. So it's a tough one to pick. Again, the level where I would, even think about stepping in on this one would be right in this $35 range. Personally, I'd rather go long the winners in this online advertising space. And in that case, you're going to look at Google and you're going to look at Facebook. And if you look at their stock performance, it is even better than what you've seen out of Twitter. So there we go. That was Twitter for you. We'll be back again later today with more videos and this weekend as well. Thank you, everybody, for tuning in. Good luck with your investments.